Tell us about this call of yours. Is this a call on the cybersecurity sector broadly, or more specifically the company itself?
I would say both. The cybersecurity sector obviously is no secret that it's probably going to do very well in the next 5 to 10 years, say. It's growing very fast, over 40, almost 50% per year in some segments. And obviously there is a lot of demand for it. It's very important to have the security of our mobile devices, for example, in check. So pretty much every company that operates in the sector, we believe is going to do well. Now, the problem is most of these companies tend to trade reflecting this optimism for the future because it's a justified optimism. And Sun Corporation that contains Cellbrite, so other than some secondary business that it's in decline right now, Sun Corporation is mostly Cellbrite, is trading for what we can consider some kind of a conglomerate discount. So I would say that the multiple is way below what it's supposed to be. And the moment that investors will understand it, we think there will be a very, very interesting re-rating in the future.
So what are your expectations for growth in this sector more broadly?
Well, the statistic that we saw depends very, very specifically on which kind of cybersecurity. So it's a very broad sector in general, but I would say you're talking certainly double digit in certain segments, as I said before. Some projections say even 40 to 48% CAGR, which is enormous. Now, specifically for Sun Corporation, it grows approximately 21% revenue, compounded annual growth rates. And because it has some operating leverage, earnings are growing even faster. I'm talking about Cellbrite, not Sun Corporation. The Sun Corporation undervaluation is also due to the fact that the financials are intertwined with other businesses, which are secondary, which represent less than 20% of overall revenue, but which are in decline, such as the pachinko business. So maybe investors have overlooked this company because they don't see the underlying financials, which are mostly Cellbrite, but this is not obvious from a cursory look at the financial statements.
Gabriel, how do ongoing geopolitical developments, healthcare-related, pandemic-related developments affect, or do they affect the way that you view companies now?
Well, it's very important. There have been some short-term, mid-term, and long-term changes, and I think any investor needs to take all three into account and ask themselves some very hard questions about how their investment thesis is going to change because of what's happening with COVID. In general, especially back in March, we asked ourselves if we wanted to deploy some money, and in the end, at some point, we deployed a lot of money. We went almost all in. Most investors have three choices. They could do and try their luck with deep value segments, which are basically the segments that were impacted the most by COVID, for example, energy, transport, entertainment. But obviously, it's a very high risk and high reward bet, and in our opinion, it was too risky. On the other hand, another option would have been going to businesses which haven't been impacted at all or have even been impacted positively by COVID. For example, one can think of a business like Amazon or the healthcare sector in general. The problem is, again, this is reflected in valuation, so the upside was limited. So in general, we chose a somewhere in the middle approach, looking at segments which were partially impacted by COVID, maybe indirectly because of the economic slowdown, but focusing on companies which in general had the strength, the financial strength especially, and the cash flow generation to guarantee reasonably that there will be light at the end of the tunnel, and maybe the company will find itself with a few competitors less. So this changes a lot from industry to industry, and it's an analysis that every serious medium or long-term investor must do.
Tell me about your top epic opportunities, because even as we talk, we see kind of desperate investors who are fearing they're going to miss out, right? So they're buying this dip, even though we see a pretty comparatively mild correction in the tech names over the past 3 days. Where would you be looking for that opportunity?
Yeah, I will say two things. In general, our fund is well known for being mostly an activist fund, and to the extent that an individual investor can get involved in that, perhaps by shadowing other activist funds, I think that's a good sector to be in because it's less dependent on the fluctuation of the market. And this fluctuation can become enormous and sometimes too steep for most investors to tolerate. So our solution is that we devote almost 80% of our time to activism, mostly short activism, but sometimes, as you can see with Sun Corporation, we do some long activism as well. That said, we decided out of all position to look very deeply into tech in mid-March. And I'm talking about some lesser known company, but also Facebook, Google, Apple, those companies that went down almost like the rest of the market. But in our opinion, they were likely to definitely to survive the crisis, but to come out stronger. So that was a good bet back then. Right now, my advice to most investors is to be very careful and to probably ask themselves if they really want to be in this market, if they waited. I mean, in other words, the time to get in our opinion, was several months ago. Right now, valuations are very rich. And if you're already in and you think you have a business that's strong and led by good management, with good cash flow generation and a good balance sheet, that, yeah, by all means stay in. But I definitely would not get in if I were all cash right now, because the likelihood of having a correction, even a steep one, can be very high. And most people cannot tolerate it.